for this one. Yes. See, in the last class, we discussed about rent-free accommodation. We have discussed and we have discussed the problems on rent-free accommodation. Important problem from the point of view of examination, 8 marks. Then we discussed about motor car and its rules we have discussed. So let us see the motor car rule now. Again, once again, we'll go through the rules. Valuation of perquisite in respect of motor car. So here, employee would be provided with motor car facility. So usually what happens here? Um, Employee will be given with car facility. It may be for personal purpose or it may be for official purpose. So when it is for personal purpose, what is a treatment? When it is for official purpose, what is a treatment? And when it is for both the purpose, what is a treatment? That we have to see. That we have discussed in the previous class. So there are four column. For the rule, four column is given. One is owner of the car. Who is the owner? That is very important. Whether it is employer or employee, that is also very important. Then expenses incurred by whom? Whether it is incurred by employer or employee. Then purpose. For what purpose car is used. Then whether there is a tax value or whether there is a taxation on motor car, that we have to see. So first now let us see the first case. Here owner of the car is employer and expenses incurred by employer. So owner is also employer, expenses are incurred by employer and purpose is official. Whenever the purpose is fully official, then there is no tax. It is exempt from tax. So here value of perquisite taxable is nil. Value of perquisite taxable is nil. That is under first case. Now, if you see the second case, there is employer, owner of the car is employer, expenses incurred by, again, it is employer, but it is used for only private purpose. Private purpose means only for personal use. Here, employer is using the car. In the employee is using the car means your car is given by the employer to employee and employee is using for private purpose, but owner is employer and any all the maintenance cost of the car is borne by employer. So now you see, whenever it is used fully for personal purpose, in that case what is the perquisite value? Then actual running and maintenance cost to the employer, that we have to see. It may be fixed in nature. For 1 year, this is the maintenance cost of the car. It may be 20,000, 30,000, 40,000. It may be anything. Then remuneration to the chauffeur or driver. Driver's remuneration you have to add. If a driver is provided, then you have to add driver's remuneration plus 10% of cost of car. Why? Because every year there may be some wear and tear. Normal wear and tear may be there for car. That is why 10% of the cost of the car you have to take. Suppose cost of the car is 5 lakh. 5 lakh into 10% you have to take. Minus any amount recovered or any amount charged to employee, that you have to deduct. So that is the treatment when the car is used for only private purpose. Now, if you see next third case, employer is the owner and expenses are met by employer. Car is given to employee, but car is used for both official and personal use. In that case, we have to see whether the car is a big one or whether the car is a small one. So, how to see whether the car is a big car? If cubic capacity or cc of the car is more than 1.6 liter, then we'll assume that car is a big car. So whenever the car is a big car, you see cc of the car engine up to 1.6 liter is rupees 1,800 per month and 900 per month if a driver is provided. So this amount is fixed. If car is used for both the purpose and your owner is employer and expenses are borne by the employer, in that case what happens? This amount you have to take 1,800 fixed amount per month and 900 you can take only when there is a driver is there for that particular car. So now this first case is for car when it is a smaller car. Why? Because they have given up to 1.6 liter, isn't it? Up to 1.6 liter means maximum it may go 1.5, 1.6. Yes. So now above 1.6 liter means big car. CC of the car engine above 1.6 liter means big car. For big car, what happens? 2400 per month. For small car, 1800 per month. 900 you have to add per month if a driver is provided. That is one more case. Then similarly, there is the next case. If you see, there is owner is employer, but expenses are met by employee. In that case, what happens? There is a change in the statutory amount. Again, car is used for both official and personal purpose. Again, we have to see if it is a small car that is less than 1.6 liter, 600 per month, fixed amount. Driver is there 900, that is same. Then if car is a bigger one, then that is above 1.6 liter, 900 per month, and 900 per month again if driver is provided. That is clear. Now this is case number 4. Then if you see, then owner of the car is employee. Now car owner is employee and expenses are met by employer, and it is used for official purpose only or for business purpose only. In that case, there is no tax. That we have already discussed. Only for official purpose, there is no tax. The last case, if you see, owner is employee, expenses are met by employer, and it is used for both official and personal purpose. In that case, what you have to do, that is, first you have to determine actual cost to the employer. How to determine actual cost to the employer? That is all maintenance, wear and tear, everything you have to add first. Then any amount charged to the employee you have to deduct. Then from that you have to deduct statutory amounts. Less if CC up to 1.6, then 1800 per month. If CC above 1.6, 2400 per month, whichever is applicable. So these are the 6 cases, but from the point of view of examination, these 2 cases are very important, including this statutory limit, cases including statutory amounts. These 2 cases very important. Yes. Then what happens? Sometimes employer may provide more than one car. What happens? Here employer may provide more than one car to employee. In that case, what we have to do? So these are the cases we have discussed till now, 6 cases about motor car valuation, perquisite value. Now you see, facility of more than one car provided by the employer and used for both the purposes, value of the perquisite shall be computed as. So now first one we will see, for one car perquisite value as computed based on cubic capacity. That is nothing but statutory amount. So it may be 1800 or it may be 600 per month, or it may be 2400 or it may be 900 per month, depending upon whether the car is a big car or whether it is a small car. Then what about the remaining car? Suppose employer has 3 car. First car will take this cubic capacity, and remaining 2 car we will calculate as per this. See this, for the remaining car value shall be determined as actual running and maintenance cost to the employer, that may be fixed amount, plus remuneration to the driver if driver is there, that is per month remuneration, plus 10% of the cost of the car, that is for normal wear and tear, minus amount charged to employee for each. Yes. So these are the rules governing motor car perquisite valuation, rule 3 clause 2. After discussing all these rules, we have to see one problem. See this. Now we will see the problem now. Problem number 5. Mr. Sohan has been provided a car 1.7 liter by his employer Vikas Limited. So here Sohan is an employee, car is big. Why? Because here CC engine cubic capacity of the car is more than 1.6 liter. That is why we'll assume that it is a big car. Cost of the car to the employer is given, that is 3,50,000. Cost of the car is fixed, when you are purchasing you will incur that expense. Then maintenance cost incurred by the employer is 30,000 per annum. That is for 1 year 30,000. That is actual cost. So that is given 30,000. Chauffeur salary paid by the employer is 3,000 per month. That is nothing but driver's salary. Driver is there for that car and 3,000 per month is given to that driver. Find value of perquisite for Sohan for the assessment year 2020-21 if the car is used for. So now there are various cases that we have to see. What are those cases? See this. First one, it is for official purpose. First case, you have to find out perquisite value when car is used only for official purpose. Second, only for personal purpose or private purpose. Third one, it is used for both the purpose. Both the purpose means official as well as personal purpose. In case B and C, employee is being charged 15,000 per annum for such a facility. So this is the amount taken from the employee. So as per the format, we know this amount we have to deduct. This amount we have to deduct, that we have to see. So now one by one we have to see the calculation. See this now. First one, solution when the car is used for official purpose. Can you tell me what is the perquisite value? Yes, tell me. Only for official purpose. Whether there is a tax. Can you answer? Whether there is a tax?
No, sir.
No tax? No tax. Yes. Why? Because it is used for business purpose only. See this first one, nil. Perquisite value or taxable value is nil as the car is used for official purpose or office purpose. Now, next to condition, there is a taxation, isn't it? That is personal purpose and both the purpose. So now we'll discuss about personal purpose. That is question number 2. So for personal purpose, first we want a taxable value of the car facility. So it is better to do the format particular details and amount. So under particular, one by one information that is given in the question we have to write. Whenever there is a cost of the car is given, there is a normal wear and tear that is 10%. So 3,50,000 into 10%. First one, depreciation of the car. Depreciation of the car, that is 35,000 we have taken. Then maintenance cost, that is fixed per annum given in the question, that is actual 30,000. So this also we have to take 30,000, add first depreciation plus maintenance, then driver salary. Driver salary 3,000 per month is given in the question. 3,000 into 12 for 1 year we are doing the calculation. So 36,000. So now total value now. What is the total value? 1,01,000. Add all the three. 35,000 plus 30,000 plus 36,000. From this amount charged from employee we have to deduct. That is given in the last sentence of the problem. Employee is being charged 15,000 per annum. That is 1 year 15,000 is taken from employee. That we have to deduct. So taxable perquisite value now what happens? 86,000. So this is the answer for point number B. That is only for a personal purpose. Next, next thing we have to see when it is used for official and personal purpose. That is when it is used for both the purpose, we have to see now. See this, when it is used for both the purpose, what happens? There is a statutory limit or statutory amount we have to take into consideration. So in this problem, whether the car is a bigger one, can you tell me now? Whether car is a big car, can you tell me?
Yes, sir. 1.7 liters.
1.7 liters. So what happens? Car is a big car. So whenever car is a big car, next thing we have to see who is the owner of the car. Who is the owner of the car here? Who is the owner of the car?
Employer, sir.
Employer is the owner.
Me.
And expenses are also met by employer. So what happens here? As per the rule, once again we'll see the rule. See this, employer owner, employer expenses are met by employer, used for both official and personal purpose. R is a bigger one, so we have to consider this amount, 2,400 per month and 900 per month if a driver is provided. So now let us see that calculation. See this, 2,400 per month for car facility. So what you can do here is 2,400 into 12 also you can do, or else 900 per month add, because driver is there here. So total amount now 2,400 plus 900, that is 3,300 per month. Then multiply by 12, like that also you can do. So the answer here, taxable value of the perquisite when the car is used for both the purpose is 39,600. Yes. So now there is one note is given. See this. Whenever the statutory value, like fixed amount, fixed amount is taken, like 1,800, 2,400, 600, 900. If such amount is taken fixed, then what happens? We cannot deduct amount charged from employee. That is nothing but, see this, for the second case we have deducted this amount charged from employee. For third case, for both the purpose we are not taking that. Why? Because here statutory amount is taken. That is why. So any doubt regarding this problem? Can you tell me now? Any doubt regarding this one? Have you understood this problem? Small problem, motor car calculation. Have you understood? Hanumanta, Narasimha, Pragati? Any doubts?
No, sir.
No doubt. I hope this is clear. If you know the rules, then it is very easy to calculate the problem, solve the problem. See this, after discussing the motor car calculation, next thing we have to see here. See this, next thing we have to see is other perquisite provided to employee or his household. Certain rules are there that we have to see. So suppose employee is given with sweeper, gardener, watchman, or a servant or personal attendant. In that case, what happens? Should we take such amount? Yes, see this, there is a rule. Cost to the employer we have to take. So if these are paid by the employer, that amount we have to consider for income from salary, for the purpose of taxable salary. Then from that deduct if any amount recovered from employee. If employee is paying any amount, that you have to deduct from the cost to the employer. That is the first one. Next, similarly, if there is a gas, electricity, water for household consumption is given by the employer, in that case also what happens? Actual cost to the employer we have to take if it is procured from outside. If the resources are owned by the employer, that means employer is himself generating the electricity, or if he is the owner of some electricity board or water board or gas board, in that case what happens? In that case, manufacturing cost per unit supplied must be taken. So these two are very, very important from the point of view of 16 mark problem, because in 16 mark problem there may be adjustment regarding sweeper, gardener, watchman, personal attendant, gas, electricity, water, etc. Then if you see, one more thing very important is educational facilities. Educational facilities to the members of his household. So now what they are saying is employees children, suppose employee has two child, so his children goes into an institution owned or maintained by the employer. Suppose there is one school, international school, and that is owned by the employer. In that case, what happens? If the cost of the education per child does not exceed 1,000 per month, then it is not taxable. So there is one limit is given under taxation, that is up to 1,000 it is exempt. If it is more than 1,000 per month, it is taxable. Suppose cost of the education of one child is 1,500 per month, and that child goes to an institution which is owned or maintained by the employer. In that case, what you are going to do, that is 1,500 minus 1,000. Why? Up to 1,000 there is no tax. That is why minus 1,000 remaining is taxable. 500 per month is taxable in that case. See this, then it is not taxable. If exceeds, then cost charged in a similar institute in a local area less than 1000 per month per child for point B and C. That is, point B and C means here other schools, for other members of the household. In that case, what happens? Cost of the employer or cost to the employer must be taken. Less amount recovered from the employee should be deducted from the cost to the employer. Yes. So that is about educational facility provided to employees' children. Then there is one more thing regarding interest-free loan or loan at a concessional rate. One more very important rule. So here what happens? Again, for 16 mark problem, there may be some adjustment regarding vehicle loan taken. So in that case, we have to see lending rate at State Bank of India. That is SBI's lending rate we should see, and it should be taken as should be chargeable as value of perquisite. So there are certain exception to the rule, that is under the following cases valuation is nil when and all. If loan amount is less than 20,000, perquisite value is nil. If loan is taken for the treatment of specified disease, specified disease means under rule 3A there are certain disease mentioned like AIDS, TB, etc. Those are specified in nature. So for such disease, if loan is taken, then perquisite value or taxable value is nil. Yes. Then there is a movable asset or other than computer or laptop or other asset. Yes, in that case, if there is asset is given in the problem, 10% of the actual cost if owned by the employer or actual rental charges paid or payable by the employer. Yes, among these two, anyone can be taken depending on whether it is owned or whether it is rented by the employer. Less amount recovered from employee you have to deduct. So these are the some other rules you have to keep in mind before going for 16 mark problem, that is calculation of income from salary. Yes. So any doubt regarding the rules now? So for a 16 mark problem for salary calculation, first thing they will give the basic, then they will give the DA, then any addition to the basic like bonus, commission, they will give you. Then after that they'll give you some allowances like taxable allowance. I have given you the list, right? From that several allowance can be asked. After that, if there is any contribution to RPF, recognized provident fund, that comes employer's contribution, interest on RPF, that and all comes for income from salary calculation. After that, if there is any perquisite value given like RFA, rent-free accommodation is given, watchman, any facility is given to the employee, that and all comes. After adding all these things, from that you have to deduct certain amounts, like there is one standard deduction that we have discussed, that is 50,000 we have to deduct. Then entertainment allowance is there, that also we have to deduct if he is a government employee. Then we have to give the deduction of entertainment allowance. Then there is a professional tax also we have to deduct. So all these things if you deduct, you will get final taxable salary amount. So now our next topic here is provident fund. For theory purpose, it is very important. Now provident fund calculation and rules of provident fund. So what are the various types of funds are there? So there may be recognized provident fund. Then there may be public provident fund, then unrecognized provident fund may be there, then superannuation fund SPF may be there. So there are various things, so that we have to discuss now one by one. Provident fund, so what do you mean by provident fund? So it is one kind of retirement scheme. So if you see here, if you see now PPF is very popular. Okay, public provident fund. So here under PPF, what you can do, up to 1,50,000 per year you can invest the amount, and usually duration of the PPF is 15 year. Usually it is 15 year, and that PPF amount, that duration you can extend after 15 year for 5 more years. So usually up to 20 year you can invest in PPF, and PPF comes under EEE category, that is exempt category. So everything whatever invested in PPF is exempt from tax, that is public provident fund. So can you tell me what is the present rate under interest rate under PPF? Can anyone tell me now? Public provident fund, what is the present rate going on? Yes, tell me.
No idea, sir.
Anuj, Hanumanta, Anmeet, Narasimha, Pragati. PPF present interest rate, whether they have slashed the interest rate, whether they have increased the interest rate, what is your opinion? So now during the COVID time and before the COVID time also, what they have done now, they have reduced the interest rate of PPF.
To 10% also.
Oh, what?
Is it? It was 12%. Now it's 10%. For
No,
3 months,
no.
it was
So
10%.
now PPF rate is very less now. Now 7.1%. I think it is 7.1% now. Before it was around 9% or 10%. Now they have reduced. So it is subject to change, PPF rate, isn't it? So again it may get increased. That we can't say. See now, Provident Fund is a retirement scheme. This scheme makes an obligation to the employees for contribute to the Provident Fund account on monthly basis. So you can make a monthly investment also, or you can make a lump sum amount also. Lump sum amount means for 1 year you can put the amount in PPF based on the income received under the head salary. So now at the time of employer also contributes equal amount. So suppose if you are salaried person, there may be some kind of deduction, that is PF deduction. You may be knowing that PF deduction is there, isn't it? So whenever there is a PF deduction, that is depending on certain percentage, it may be 10%, it may be 12%, fixed percentage. So if 12% is taken from your salary, then same percentage should be contributed by the employer also. Suppose 800 is deducted from your salary, 800 employer will also put 800 to PF account. So that is the meaning of this one. See this. At the same time, employer also contributed equal amount towards the fund. So where this amount goes? This contributed amount to the PF would be invested in gilt-edged securities. What do you mean by gilt-edged securities? Can you tell me now? What do you mean by this gilt-edged securities? Yes. Can you tell me what is gilt-edged securities? See, gilt-edged security is nothing but it is one kind of government securities, safe investment, government securities. So, interest earned on such securities will be credited to employees' PF account. Okay. After that, what happens? Employees' contribution to PF will not be treated as income to the employee. Why? Because PF is the sum PF is a sum is the investment made by him. That PF contribution is that sum is the investment made by him, and such a sum is allowed to claim deduction under section 80C. And you know, employees contribution to RPF is eligible for deduction under 80C. So 80C maximum deduction amount, you may be knowing. What is the maximum deduction amount under 80C? Can you tell me? What is the maximum deduction amount? Up to what amount one individual SSC can claim the deduction? So it is 1,50,000. Maximum deduction is 1,50,000. However, employer's contribution to the PF is to be treated as income to the employee. Hence, it is includable to the salary. See this employer's contribution, it is added to the salary depending on a certain percentages there. Like above 12% of the salary it is taxed, like that. Certain rules are there that we have to see, subject to the provisions. So now provident fund, four types of provident funds are there. So what are those provident funds type? We have to see one by one. First one is statutory provident fund, popularly known as SPF. So it is a fund set up under provisions of Provident Fund Act 1925. So statutory means what? Statutory means it may be a government or semi-government organization, local authorities, railways, universities, recognized educational institution maintain statutory provident fund. So this is a brief information about SPF. Similarly, there is RPF is there, recognized provident fund. From the point of view of 16 mark problem, this is very important. Recognized provident fund. It is a fund scheme framed under the Employees Provident Fund and Miscellaneous Provisions Act 1952. Later, it was very popularly known as PF Act or Provident Fund Act, that covers any establishment employing 20 or more persons. So here PF becomes mandatory to be given to the employee if employer has more than 20 employee in one concern. Then PF is mandatory, or PF must be given by the employer to employee. That is about recognized provident fund. Then similarly, there is one more type of fund, that is unrecognized provident fund or URPF. So what do you mean by URPF? It is not recognized by Commissioner of Income Tax. This is very important. It is not recognized by Commissioner of Income Tax, and if the provident fund scheme is created by an employer, it is not recognized by the Commissioner of Income Tax, then such a fund is known as unrecognized provident fund. Whether the contribution made to URPF is eligible for deduction under 80C. So that is one more question we have to ask. That is, it is not eligible. See this, URPF contribution is not eligible for deduction. Only contribution made to RPF, that is a recognized provident fund, is eligible for deduction. Similarly, if there is a PPF contribution, there is one more rule chart is there that we have to see. Now, what do you mean by PPF? We have already discussed about PPF. Under PPF, usually it is a scheme for 15 years, and 1 year we can invest maximum of 1,50,000 per annum. The central government has established a fund for the benefit of the public to mobilize the personal savings. So anyone can take the PPF account. Anyone can invest in PPF account. So amount must be in multiple of 5. So it may be in multiple of 5 means 5, 500, like that, 1,000. Subject to a minimum of 500 and maximum of 1,50,000 per annum may be deposited in this account. Interest credited every year but payable only at the time of maturity. So here withdrawal option is provided depending on certain circumstances only. Usually withdrawal is not allowed. That is after 5 years, if there is certain condition is there, then withdrawal you can take or you can make. So interest earned on this fund is exempt from tax under section 10 clause 11. So interest is exempt from tax. Any investment made to the PPF is also exempt from tax. So it is beneficial to the SSE to invest in PPF. So after discussing all four types, that is statutory, recognized, unrecognized, and public provident fund, and there is superannuation provident fund, that is nothing but you are getting your total amount in annuity, that is installment basis you are getting the amount. Now let us see the chart now, tax treatment. So this is very important from the point of view of examination. This chart is very important. So now we will see particular, under particular column, first one, employers contribution. Employers contribution, under which type of fund it is taxable and under which type of fund it is exempt, we have to see. So first one, employers contribution to statutory provident fund, that is not taxable. that is not taxable. Employer's contribution to RPF. What about RPF? RPF, it is taxable, but there is a rule. Exempted up to 12% of the salary, and if it is 13% of the salary, if employer made a contribution 13% of the salary, then what happens? Then 1% is taxable. See, this difference is taxable. 13 minus 12%. That means that 1% is taxable and 12% is exempt from a tax. And here, what do you mean by salary? Salary means basic plus DA, and DA also you can take only if it enters the retirement benefit, and commission you can take if it is given as a fixed percentage on the turnover. This is about RPF. And URPF, unrecognized provident fund, employer's contribution, not taxable. PPF also, it is not applicable at all. Next, very important is 80C eligibility. Their employees' contribution we have to see. So SPF, statutory provident fund, eligible for deduction under 80C. That means if the employee is making any contribution, suppose he invested 15,000 in SPF, so you can claim that deduction under 80C. Similarly, RPF, recognized fund deduction, also you can claim under 80C. But URPF and URPF you cannot claim. See this, not eligible for deduction, and PPF eligible for deduction under 80C. So in short, you can say all the funds are eligible for deduction under 80C, employees contribution, except for URPF. Why? Because it is unrecognized provident fund. It is not recognized by Commissioner of Income Tax. Next, interest calculation. Interest of SPF is not taxable. Interest of RPF, it is taxable if it is more than 9.5%. Exempt at 9.5% interest rate. Any excess interest will be taxable as salary. URPF anyways not taxable. PPF also not taxable. Lump sum withdrawal. Lump sum withdrawal, SPF not taxable, and for RPF there is one note is mentioned that we have to see. Note we have to see, and for URPF also there is one note that we have to see, subject to condition. Note means there is subject to condition. Then final one is PPF. PPF is not taxable. Lump sum withdrawal not taxable. So here you can see the PPF column. It is beneficial to the SSC. Everything is not taxable. There is no tax at all. See this, employer contribution not applicable. Then employees contribution, there is a deduction you can claim. Interest is not taxable. Withdrawal is also not taxable. So it is benefit to the employee if he invests in PPF, Public Provident Fund. Now, note 1 is for URPF. Note 1 is for URPF. What is this? Lump sum amount withdrawn from URPF. So now there are various cases we have to see now. Accumulated employers contribution. So now accumulated employers contribution is fully taxable under the head salary. So you have to take this amount for salary. Accumulated employees contribution not taxable. Not taxable. Then accumulated interest on employers contribution. So some employers contribution now total is 5 lakh. So on that 5 lakh there is a 10% interest, means 50,000 interest. What you have to do? Fully taxable under the head salary. Wherever there is employer is written, it is taxable under salary. And what about accumulated interest of employees contribution? This is very important. It is fully taxable as income from other source. So we have to treat URPF interest on employees contribution as other source, and we should not record under income from salary. So this is about note number 1, lump sum amount withdrawn from URPF. Next, note number 2 is a lump sum amount withdrawn from recognized provident fund. So recognized provident fund, again there are 4 sub-point is given that we have to see now. Amount withdrawn from recognized provident fund is not taxable. So usually RPF eligible employee is eligible for RPF, that is withdrawal limit is eligible only after 5 years. See this, employee retires or terminates a job after 5 years of continuous service, then there is no tax. He can take the amount. Then employee has resigned before the completion of 5 years and joins another organization, and he transfers the fund balance of the current employer to the new employer. In that case also no tax. That is lump sum amount withdrawal, there is no taxation. Then entire balance standing to the credit of employee is transferred to the account under the new pension scheme as referred under 80cc. So you know from 80C to 80U there are various sections. So as per our syllabus, 80C is very important section because 8 mark question is there. Then 80CCD there is a pension scheme that also sometimes theory part comes. Then employee retires or terminates job before 5 years of continuous service. Then also he can withdraw the lump sum amount, no tax. Then there may be certain rules are there or condition is given by the reason of ill health. Why he terminates or retires from the job before 5 years? Because his health may not be proper, or because of the reason of contraction or discontinuance of employer's business, or by any other reason beyond the control of employee. In all these cases, RPF lump sum amount is not taxable. So I hope now you understood in brief what do you mean by PF and RPF, URPF, SPF and its taxability. Yes, have you understood the rules now? Can you tell me, Anumanta, Anuj, Anvit, Pragati? Have you understood now?
Yes, sir.
Yes, tell me, Anuj, what you have understood. Yes, tell me. See, these rules you have to go through. Once again, you have to go through these rules because everything is not important. Everything is not important from the point of view of examination, but it is better to know each and everything, isn't it? So, important thing we will discuss while solving the problem because if you see the past question paper, all the problems are repeated in nature except for a few adjustments. So that too comes year after year, same adjustment they'll ask. So that we have to see. So after this, what happens? There is a deduction under section 80 that we have to discuss in the next class. So I hope all the concepts